Hey, Dennis Tubbergen here. It's January 21, 2019. I'm here with another market update. Stocks advanced yet again for the fourth week in a row last week. The Standard & Poor's 500 rallied about 2.9%. The Dow followed closely with gains of just under 3%. And as one might expect, as stocks rallied, precious metals declined. Gold fell just under 0.5%, and silver dropped almost 1.7%. And the yield on the long-term U.S. Treasury rose 5 basis points to 3.09%. Now, the Dow to gold ratio, which prices gold, the Dow in gold rather, by dividing the price of the Dow Jones Industrial Average in dollars by the price of gold per ounce in U.S. dollars, once again jumped back to over 19. And we noted last week in our market update that our long-term target for that ratio is at least 2, more likely 1. Now, the chart that you see on the screen is a chart of the Standard & Poor's 500. It is a weekly chart, and each bar on the chart represents 1 week of price action. The green bars represent weeks that the market went up. The red bars represent weeks that the market went down. Now, stock prices have actually rallied a little bit further than I would have expected if this rally were a textbook bear market rally. However, I still think that the odds favor more downside for stocks. And I think we're going to see that begin here within the next 2 or 3 weeks or so. The blue trend line on the chart is really important. Stock prices have to remain below that trend line in order for our outlook to remain that there will be more relatively immediate downside for stocks from here. Now, one of the newsletters that I like to read every week is something called the newsletter called the Hat Trick Letter. And this chart is taken from that newsletter. Now, this chart is a chart of the Standard & Poor's 500 index as a ratio of the U.S. dollar index. Now, if you take a look at that chart, during bubbles, stocks soar and dramatically outperform the U.S. dollar index as a result of easy money from the Federal Reserve. When the U.S. dollar begins to outperform stocks, the bubble bursts, stocks correct, and the cycle comes to an end. Now, this has preceded every crisis since the 1990s. Mr. Jim Willey, the editor and publisher of the Hat Trick Letter, points out that the U.S. dollar began to outperform stocks in April of 2001, and within 3 weeks, the stock market topped. The same thing occurred in December of 2007, and again, that occurred within just weeks of a market top. The pattern rather is once again close to repeating, so we believe that's another reason that the highest probability for stocks moving ahead is more downside. This past week, we began to produce a radio show and podcast, the Retirement Lifestyle Advocates radio program. It aired on traditional radio over the past weekend, and a podcast of this week's program is now posted at retirementlifestyleadvocates.com, retirementlifestyleadvocates.com. And on this week's program, I interviewed Mr. John Rubino, who is the co-author of the book, The Money Bubble. And if you missed the show live, you can catch the podcast by visiting retirementlifestyleadvocates.com. John offers in this interview his forecast for gold and other asset classes. And if you missed the program, I would encourage you to check it out. In past issues of Portfolio Watch, which is our written weekly update, you can get a free subscription by visiting yourportfoliowatch.com. We talked about the problem of underfunded pensions. And there's lots of states who have pensions that are underfunded. The poster child for underfunded pensions would probably have to be the state of Illinois. The total shortfall for Illinois' 5 state-run pension funds, it was reported, now is $133.5 billion at the end of 2018, compared to last year's $129 billion. The 5 pension systems that fund state retirees' pensions and retirements have just 40% of the funds they need to meet their obligations in the future. Most notable is the funding ratio for the state lawmaker pensions. It has just 15% of the money it needs to pay future benefits. So no matter how you measure it, the state of Illinois' pension system is broke. And there will have to be a bailout or pension cuts. We are betting on the latter as this economic winter season progresses. That's this week's market update. Thanks for listening.